Thursday, January 16th, 2020, Maneco 64, home of alternative economics and contrarian views. This morning, I want to talk about how a tsunami of debt is going to engulf the world in 2020 and thereafter. I spoke about how the UK government already issued another extra 14 billion pounds in the coming last 3 months of the fiscal year. And yesterday, of course, there were a lot of important news and headlines concerning the trade deal, or phase one signing of the deal. There was the U.S. House voting on the two articles of impeachment. They sent it to the Senate, where the trial will begin on Tuesday. I'm not gonna go into the politics of it, but as you can see, there are a lot of distractions, a lot of division, and I guess the Trump administration has kind of got itself out of a hole concerning the trade negotiations, the trade deal. We know, and I've spoken about this before, that the trade deal was supposed to have been signed on March 1st, 2019. What we have now is a phase one, which is something they came up with a few months ago. I think it was in October. So how many phases are they going to be? Are they using this as a political and financial football, this trade negotiations, trade deal? I think so. There's a lot of opinions as to whether the trade deal is good for America or not. I saw Steve Bannon said that it was a great coup for the United States. I see Greg MONERO saying that it was not. What is my opinion? My opinion is that the big U.S. multinationals and corporations, which are mostly reflected in the Dow, in the S&P, they've benefited in the last 20 to 30 years from globalization, and globalization helps them. Why is that? Well, because they can arbitrage regulatory rules, they can arbitrage labor costs by offshoring things and increasing their profits. And that's why I think it's a bit confusing for me, at least, to think about these trade negotiations, because according to President Trump, the objective is to bring American businesses and manufacturing back to the U.S. And I think that would probably not be, if anything, it might be neutral for these corporations, if anything negative, because they're going to have more regulations in the U.S. Granted that the Trump administration has cut a lot of red tape, but compared to emerging market countries, third world countries, the U.S. has a lot more regulations, labor costs a lot higher in the U.S. So I'm not too sure about it. So if you have any opinions, please comment below in the comment section. I'll try to answer them as best as possible. You might give me some ideas as well. For those of you who also support me through Patreon, you can message me directly on Patreon and I will answer your questions. And I'm not saying that I won't answer your questions on the comment section, but it's harder when I have a lot of comments to keep up with it. So yeah, a lot of headlines yesterday, a lot of distractions. Well, not quite distractions, but in relation to the debt story. So what did we have yesterday in terms of the debt? We know that the national debt in the U.S. is still ballooning. The deficits are running like at recession levels, the deficit to GDP levels. So we had this story come out yesterday. I saw it on Zero Hedge. Debt eruption coming. Kudlow, that's the council, the chief of the Council of Economic Advisors to the White House, ex-CNBC pundit Kudlow says tax cut 2.0 will be unveiled later this year. So I'll quickly go through this here. It says, shortly after Charlie Gasparino tweeted that the Trump administration is mulling an election year fiscal stimulus as part of budget proposal, and which may include a payroll tax deduction and increase in earned income tax credit. Larry Kudlow spoke on CNBC confirming that the White House indeed plans to unveil a plan for additional tax cuts in later in 2020. This is what he said. I am still running a process of tax cuts 2.0. We're many months away. It'll come out something later during the campaign, Kudlow told CNBC. Tax cuts 2.0 to help middle class economic growth. That's still our goal. And it goes on to say here, what this means is that after the 1.1 to 1.2 trillion budget deficit in 2020, the U.S. is starting on an even wider deficit next year, which of course will be funded by debt. And since foreign buyers have been increasingly less excited to buy U.S. debt, will force the Fed to expand its QE to buy coupon bonds across the entire curve. So another story here related to debt and the budget came out in the Wall Street Journal yesterday. U.S. budget gap continued to widen in 2019. Federal deficit totaled 1.02 trillion over 12 months that ended in December. Don't forget, the fiscal year is October to October. This was just like on the calendar year. But yeah, if you look at the, and I won't put the chart up today, but if you look at the national debt, it was just under $1 trillion when Reagan came into power, 900 billion. The Dow was around that level, not that level, but it was around 850 or 800. And now we're over 23 trillion, probably going towards 25 maybe by the beginning of next year. And where's the Dow? Well, it's gone from 800 to almost 30,000 now. So you can see how the debt is important to financial markets. But I would say the middle class hasn't benefited. It's been the top 9%, which now own 82% of all the wealth. I've done videos before using the Federal Reserve's data showing how wealth inequality has grown. Larry Kudlow is of the idea that things trickle down. He's one of these economists. He believes that rising financial wealth for the top 9 or 1% is going to trickle down. But we've seen that hasn't happened. Am I a socialist? No. I'm a proponent of sound money, of, no central banks. Sound money means being on a gold standard where the state and politicians can't spend willy-nilly. Am I against tax cuts? No, as long as you cut the size of government. And President Trump hasn't done that. If anything, he's increased the military. The budget deficits are growing. And the article in the Wall Street Journal shows a little chart here that I want to show you about the, it measures the annual budget deficits. And this is going back to 1980. And you can see that during the 08 crisis of 08, the deficit plunged. And why did it do that? Well, because tax receipts dropped massively because the economy imploded, while government spending stayed the same, or probably was even increased because the Keynesian philosophy, which seems to be kind of a mix that the current administration uses. And why do I say that? Well, because they're increasing deficit spending. That's a Keynesian idea. Yes, they're cutting taxes, but they're not cutting the size of government. And you can see here This is since 2015, when that deficit reached just 2.6%. It's been increasing. The chart shows it's dropping. Of course, it's a negative number. The deficit becomes larger. And we're heading towards 5%. And we're probably certainly going to go through 5% in the next year or year and a half, especially if we get a tax cut 2.0. It doesn't seem to be helping the economy. The debt is growing faster than the economy is. I think the current administration, Larry Kudlow, think that the debt will kickstart the economy, that the tax cuts as well. We'll have to see. Of course, you have I don't have to talk about the central banks, how much they're enabling this by buying bonds, by printing money. It's just crazy. So the debt tsunami, in my opinion, is going to get worse. Not only in the US, it's in the UK. You've even seen the German central bank, the president there, actually, in my opinion, surprisingly saying that the German government should think about deficit spending. We've seen Christine Lagarde, president of DCB, telling governments now in the Eurozone that they should also start spending. Central banks are not supposed to be influencing fiscal policy, but they are. It just goes to show that the central banks and the governments are all working together. All this is going to do, as the fiat currency system is backed by the government debt, by debt, that's going to make diluted even more, and we're going to get continued rising cost of living, which is the consequence of inflation. And as I've said, inflation is the increase, abnormal increase in the money, amount of money and credit into the system. And that's what we're getting. Don't be fooled into believing that CPI is inflation. Yesterday we had a CPI number in the UK, came out at 1.3. How many people in the UK, average person, really believes that the cost of living is only going up by just over 1%? I would say probably no one. With that, let's quickly look at the markets this morning. It's 10 to 8 a.m. Billy's not here. He will be back. He's just tired. He's getting a little older. Don't worry, he'll be back. Yesterday he had his mobile groomer came over, parked on our drive, and he got a haircut. He needs one about every 2 months. So yesterday the stock market rallied. It did come off the highs. The Dow finished up only 90 or 1/3%. S&P and NASDAQ underperformed this morning. Gold right now is down 3 at 1553. Range has been 1551 to 1558. Silver's been quite frustrating, I know. We got up as high as 1806 overnight. Right now it's 1787, down 12. Yeah, I think patience is the key word for the precious metals. That's what I've learned over the years, that you need to be patient and you need to think of it as monetary protection, not something that will make you rich. You can try to get rich through speculating in the gold futures or mining stocks, junior mining, but precious metals is stable store value savings. That's the way I look at it. Not surprisingly, the stock market continues to go higher. I didn't see anyone saying the stock market is going up because of we're going to see more tax cuts and deficit spending. I think that's one of the reasons why. Most of the commentary has been about the trade deal. So the Dow's up 76, Dow futures at 29,115. S&P just below 3,300, up 1/4%. NASDAQ 100 future up 1/3% at 9,066. Currencies are fairly quiet. the fiat currencies foreign exchange market, sterling is unchanged, 130.42, euro 111.47. Yeah, not much going on. Yen just around 110, the dollar yen. Oil up slightly. WTI is up 0.5% at 58.15. Brent 63.87, up a third. I'll finish off with the bond market. The 10-year yield is pretty steady. It's at 180, up 1 basis point. So in spite of the stock market going up, in spite of comments by Larry Kudlow of more deficit spending, more debt, yields don't budge. Well, because people know the central banks are going to be there to keep the bond market propped up, because the bond market is the base of this fiat money system, U.S. Treasuries. A lot of the assets are priced off the risk-free return, which is the 10-year yield. You might find that funny that it's the risk-free rate of return, but as Alan Greenspan said, the U.S. government cannot go broke. It can just keep printing the money. Of course, that money will lose its value the more they print. $100 will not buy the same it bought in 2000 today. Just keep that in mind. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. Please share this video far and wide. Make sure you hit that little notification bell above to be notified of all my new videos. You can also follow me on Twitter, BitChute, DTube, and Steemit. I wish you all a great day. Take care. Bye.